Click the bell icon to get latest videos from Ekeeda.
Hello friends, now we'll discuss the concept of operating profit ratio. This is one of the important ratio showing the operational efficiency of business. We'll understand meaning, formula, components and its significance. Let us understand the concept. Operating profit ratio. Operating profit ratio indicates relationship between operating profit and the sales. It is usually expressed in the form of percentage. It is also known as net operating profit ratio. Formula: operating profit is equal to operating profit divided by net sales multiplied by 100. Components are operating profit and net sales. How to arrive at operating profit? From gross margin, gross profit, we have to deduct operating expenses. Net sales means sales minus returns. Functions: operating profit ratio is profitability ratio which shows the relationship between profit and sales. It indicates profit from operation. This ratio helps to judge how efficiently the concern is managing all its operations of production, purchase, inventory, administration, selling, distribution, etc. and how much amount is left to meet non-operating expenses and earnings, that is net profits. Actual ratio, interpretation and comments. Actual ratio. Actual operating ratio of X% indicates that on each sale of rupees 100, average operating margin of rupees X is earned and the amount of X is available for meeting non-operating expenses. For example, operating profit ratio is 30%, indicates that on each sale of rupees 100, operating profit margin is 30 is earned and this amount of 30 is available for meeting the non-operating expenses. Actual ratio close to standard. There is no standard operating profit ratio in absolute terms. Each concern has to determine its own standard ratio based on its own past ratios, ratio of other concern in same industry, the average for the entire industry. An operating profit ratio close to such company standard shows optimum efficiency in managing all operations. Good control over operating cost, the direct cost as well as the overheads. Optimum productivity, optimum margin available to meet non-operative expenses. Actual ratio higher than the standard. An operating profit ratio higher than the standard indicates great efficiency in managing operations. Example: purchases made at low prices, economies of large scale production, realizing higher sale price per unit, more sales of profitable products, optimum level of stocks, etc. Very good control over direct cost of material, labor, fuel, freight, etc. Very good control on indirect cost overheads relating to administration, sales, distribution. A large margin available to meet non-operating expenses and for net profit. Actual ratio lower than the standard. An operating profit ratio lower than the concerned standard ratio shows low efficiency in managing the operations of purchases made at higher price, realization of low sale price, less sales of profitable products, wrong levels of stocks, etc. Unsatisfactory control over direct cost of material, labor, fuel, freight, etc. Unsatisfactory control on indirect cost relating to administration, sales, distribution, etc. A very small margin available to meet non-operating expenses. Interaction with other ratios. Operating profit ratio should be studied with return on capital employed and return on proprietor's fund. Calculate operating net profit ratio from the following data. This small example will help us how to use formula and calculate operating profit ratio. Sales 10 lakhs, selling expenses 1 lakh, dividend received on investments, non-operating income, gross profit, office expenses, and interest on loan, finance expenses. Operating net profit ratio, operating net profit divided by net sales multiplied by 100. Here we have information of gross profit 4 lakhs. Gross profit 4 lakhs, selling expenses 1 lakh, office expenses 1 lakh 50,000. Operating profit, gross profit minus office expenses minus selling expenses, 4 lakh minus 1 lakh 50,000 minus 1 lakh, it is 1 lakh 50,000. Operating net profit 1 lakh 50,000 divided by sales 10 lakhs multiplied by 100. So operating profit ratio comes to 15%. In this video, we have understood the concept of operating profit ratio, its formula, its components, its relevance. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.